Hey, what's up everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, I picked 5 stocks and I put $20 into each of those stocks. So we'll see what those are here in just a minute. Let's take a look at the performance of this portfolio. This is my Average Joe Dividends portfolio. It's about 15% of my net worth, and currently there's 52 different positions in this portfolio. I'll leave a link below so you can see what those are and what my percent allocations are for each position. You can see the value right now is at 273, 872.26, and this is live, so this will be changing as the video goes on. And what we can see here over the last year, the return of this portfolio has been 31.68%, so pretty close to what the S&P has done over the past year, but with at least a twice as high dividend yield from this portfolio, and I think it's pretty well diversified as well. We'll zoom to the year-to-date performance of 20.22%, and over the year so far, the dividends you can see received at $9,144.56. And over the last 3 months, we're up 6.76%, and then the last month, 4.87. The last week up almost a percent at 0.92%. Then today we're down just a little bit at 0.03%. So this downward slope, a little bit misleading. You see just over the last year, we've gone from the low 200s and below 200, and now we're just going up and to the right and getting very close to the 275, and who knows, in 2025 may get into the 300s. Don't know, because we don't know what the future will bring for the portfolio. But just recently, though, it's been up and to the right like crazy. I don't think it's sustainable to have a 30% gain, year after year. So I'm planning for some down years, and we could have, flat years or just up a little bit. But yeah, it's just been like going up like crazy. The market has, and again, I don't think it's sustainable year after year. So I'm not getting used to these gains. So we can see this morning I did a $100 deposit, and then here's the 5 buys. And before the show the buys, we're also going to see the effect on my dividend income. We're going to see that go up. We're also going to look at some historicals, going back from when I first started doing these videos. We'll see what the portfolio value was then, as well as the monthly dividends, and just I want to show you how they've been growing over time. And here's the 5 buys. And first up, Costco, $20, and then Apple, $20, Aflac, $20, and KKR, $20, and then Hershey's for $20. And the reason I chose these was I want to build up my Costco position. I think anytime really is a good time to buy Costco, even though many people will say it's too expensive. It is, and I agree with that, but Costco is always expensive, but their stock just continues to climb over time, and it's been beating the S&P for quite a while. Will it keep doing that? I don't know. But Costco is also opening stores. They're growing. They're growing their revenue. They have a special dividend, and that, like I said, that stock appreciation has been really good. Kind of more of the same with Apple. Not a big dividend payer, but a very successful company. And you really can't own too much Costco or Apple. Aflac is a little bit, everyone knows who they are by their commercials, but they have good stock appreciation as well as dividend growth. And then KKR, this is even lesser, this is a lesser known company, but they own a bunch of companies within their portfolio that are household names, some software companies and tech companies in there, and some other companies, and they have just been growing like crazy, as well over doubled my money with them. And then Hershey's is a little bit different, where their stock price has been going down, and if it weren't for the dividends, I would have a losing position. So I like Hershey's. I like Hershey's as a long-term investment, and right now, at least for me, I think it's cheap. But of course, when I'm buying is not investment advice. So let's go into these and I'll show you the fractional shares that we're getting from these. And for Costco, it is a tiny sliver at 0.02254 of a share. And then for Apple, 0.08525 of a share. And then Aflac, 0.17479 of a share. And then KKR, 0.14513 of a share. And then Hershey's, 0.10757, so pretty much 10% of a share there for Hershey's. We're going to go over to my Google Docs spreadsheet where I track all these positions as well as the dividends received. I can also do some forecasting too of what I can expect for the next dividends as well. And you can see it tracks the company, the ticker symbol, and we'll scroll over here. Looks like we're scrolled over. The share price using a Google function pulls that automatically. And here's the average share price that I've purchased. You can see Apple at even 142. Here's the number of shares I own of each position. Here's the market value if I were to sell today. Here's my cost basis, my gain or loss, and here it is the gain or loss in a percentage. And then here's the quarterly dividend per share. And then I have a couple of monthly payers that are O and BST. In the blue, they pay me every month. SCHD is in purple. That's a variable quarterly dividend, so I highlighted that. And here is the current yield percentage. You can see with Apple, with it being a 0.43%, here's my yield on cost. So the $20 I put into Apple and KKR here, it's not going to move the needle too much. It's going to be a few pennies on each of those. And then here is the pay date. And I've put the next dividend here for each of these, and they're going to change for Apple, KKR, Aflac, Hershey's, and then the last one is Costco. We'll see if Costco actually moves up to the $3 mark. And anything in over here in green, anything above $10 will be in green. So once Starbucks goes above that $10 mark, it'll be in green. We can see the total dividends paid for each of these. You can see how Apple's dividend for me has been going up. First dividend I received was 87 cents, and then the last was 3.56. And then in November, I can expect 3.68, but this is going to go up because we bought fractional shares of Apple. And then I also track the last dividend increase, and we can see like Pinnacle West in October, I'm expecting a dividend increase from them. We'll see if they do 2% again. And so we'll see in December a higher dividend just by them raising their dividend, but we'll see. And the sheet also tracks, scroll over here, I've kind of zoomed in so you can kind of see the sheet better. You can see the color key here. We are in the month of October, which is the light greens here, starting with Coca-Cola to JP Morgan. You can see there's the color key right there. And then here is the market value of this portfolio. You can see it just changed there. It's live, pulling those values from Google Finance. And here's my cost basis. And here is my gain or loss within the portfolio. Here is the average yield for if I were to buy more shares of these positions in my portfolio. Here's the average yield on my cost. And then of course, we have the pay date. Everything is sorted by pay date. And if you're curious, I could also sort it by like the next dividend. We can see what my biggest payers are, and I'll leave a link below to this sheet, of course. You can see this. You can see that SCHD is my largest payer, followed by BST, and then Verizon is my largest payer that's an individual position. And we'll scroll all the way down. You can see here's the $10 line right here with Home Depot, BlackRock, Starbucks, etc. Even Hershey's getting close to that $10 mark. And some of these are lower payers, with NVIDIA being the smallest at 40 cents. But look at that percent gain that I've gotten off of my investment of $553, which is now worth $54.94.12. So quite a return there. And I put it in the portfolio because I knew it was going to had potential for growth. And I wanted to show this income over time. While 40 cents is laughable for a dividend today, look what they increased their dividend back in May by 150%. If NVIDIA is successful for a decade or more, and if we have aggressive dividend increases, this 40 cents is going to be much different. So let's go back and we're going to reorganize this again by pay dates. And what we're going to do is we're going to grab some data from M1 and we're going to put it into the M1 data tab because we have to update the fractional shares for those 5 positions. So we'll go back over to M1, Holdings tab. And again, I'll leave a link below so you can see what's in the portfolio. But I'll just scroll through it really quickly. You can see SCHD is the largest position at over $100,000, followed by BST, then NVIDIA. Looks like it's the largest holding in here that's individual. So a lot of these really just blue chip stocks we've all heard of, like McDonald's, and there's Costco there, Pepsi, Lowe's, Home Depot, Procter & Gamble, Starbucks, Coca-Cola, etc. There's Hershey's there. It's been struggling for me. You can see down 1.1%, while all of the rest of the positions in the portfolio have been positive for me. And then you can see Pinnacle West, that's the smallest position. So what I'm going to do on this page when I came here was to grab that data so we can update the new number of shares as well as the other data in these columns, which is the average price and cost basis. So back to the Google Docs spreadsheet. I'm going to paste in this data here. Do a paste special values only. It's going to do its update. Go back to the dividend portfolio tab, and we can see here for Apple, the next dividend in November was going to be $3.68. It's going to go up a whole 2 cents to $3.70. And then same thing with KKR, going from $2.69 to $2.72. So I'm buying these in little bits and pieces, but I do 2 of these buys per week. So it's over 100 buys a year. And we also have dividend increases along the way to help propel these. So point of these videos is to show these small incremental gains, and then over time with this video series you can go back years and see what I was doing and sticking to this, and how these little incremental gains just over time, over years, is adding up big time. Then Aflac moved the needle more because they have a higher yield from 1040 to 1049. And then Hershey's getting closer to that $10 mark from $9.70 to $9.85. And then Costco, we did indeed get to that $3 mark. So $2.97. But one thing to keep in mind with Costco is I will have plus $3 here in November. But also keep in mind, Costco pays a special dividend. Here's the last special dividend that was paid to me, looks like last year, $35.69. So do not forget those. There we go. So $3 there. And we're going to take a look at the new monthly cash flow average as well as quarterly and annual. I hard-coded that $993.48. That's what it was before, so we've increased it by 11 cents, and that's not much money. But the purchases, though, were in companies, like Apple and KKR, that have a very low yield. These are more growth companies, and we take a look at how they've done for me. Like Apple, I'm up 66%. So with KKR, I'm up over 155%. And we'll go to Costco's been a good one for me. Over doubled my money with Costco. See 102.41% for Costco. So let's take this value over here, the $993.59, to the monthly average dividend tracking tab. Because I like to track all these moves, whether I do a deposit or I drip dividends, or there's a dividend increase or decrease, I track all this over there in the monthly average dividend tracking. And it was 993.59, and it was 993.48. Now it's because of the $100 deposit, which you can see here just with the O and fifth third dividend drips. That accounted for almost like an additional $100 entering the portfolio as far as income, how it added that just by dividend drips. So essentially, those alone, without me adding money to the portfolio, moved the needle as much as $100. We can see here there's a $100 deposit in Illinois Toolworks, did 16 cents, and I did a $100 deposit here. We'll just look at October. We'll select those gains, and most of them are from the BST SCHD drip, but we've added $7.30 of additional monthly income to the portfolio just in October alone, and that's $7.30 every month going forward. It's not just a one-time payment out there. So let's go to the Dividend Tracker tab. I've been doing these videos since January 2021. Here's the starting portfolio value. Here's the dividends paid to me in that month. Let's scroll down to more recent time here in 2024. And we can see the portfolio value rounded to the nearest $100 is $273.9. You can see how that changed. And dividends paid so far in the month of October, $90.23. We can see last year we got $549.56. So we'll see how much we beat that by. And then I'm also tracking quarterly and quarter-on-quarter gains and percentage and increase for each quarter. And this was in Q3. This is an anomaly because SCHD paid me twice in Q3. And it didn't pay at all in Q2. That's why it went lower artificially and why it went way higher there. But I'm predicting Q4 2024 is going to be the highest ever as far as the monthly and the quarterly as well. We deposited $100, so get that up to $500. So we can see the average monthly dividend, $993.59. There's the $7.30 for the monthly increase, and the month over month gain of 0.74%, and then annual dividends at $11,923.08. We've increased the annual dividends by $87.60 in the month of October. The last thing I'll show you is my total net worth. Like I said, this portfolio over here, this is 15% of my total net worth. I have an IRA as well at M1, but if I change over that, it shows some, account information. I don't want to show that. But I've shown it before where I've opened up a new screen and kind of shown them simultaneously. If you guys want to see that, I can do that as well, so you can see the more into my IRA over at M1. Vanguard's really hard to show without showing account numbers, so I don't. I just track the shares and everything and show you guys that. Same with my 401k. M1 works really well, with the exception of changing between accounts. So you can see here at Vanguard, I have an IRA, I have a Roth IRA, and a taxable account here. You can see there $470,000 there. And then this is my current employer since March of 2020, and I'm invested in an S&P 500 index fund with Fidelity. It's a very low fee, almost at the $100,000 mark. Here's that M1 Finance IRA. I was talking about the other account, which is just over $700,000, 701. And then here is the dividend portfolio that we went over at length over there. It's at 274.037 at this minute. Of course, it's changing. Then at M1, I have my 1-year emergency fund earning 4.5% interest. And then over at Synchrony, I have another savings, about another 6 months of expenses. And then over here, this savings is more short term, where I will have my, it's more of a checking account where I'm paying bills out of. And I'll have like about 2 months of expenses over here. And what I do is I just transfer money to my checking account to say, pay this off. So that's what I'll do is I'll put that $2,044.09 or whatever the balance is before the billing cycle is due, and move that over there to checking and then pay it off. So that's why I keep that. Actually, I have a little bit more than I need over here. 10,000 has kind of been the cap I've been wanting to keep over here because the interest rate's 4.1, so it's not the most optimized. I can get 4.3 or 4.5 over here, but it's not a big deal. We're talking, a few dollars. If that here's my home value, and I kind of hesitate to even count this. I don't count things like cars or collectibles or jewelry, anything like that. To me, that's kind of clown net worth. It really doesn't matter. If you're just starting out, you can show that, but even the more and more I think about home value, to me is kind of a gray area because I have to have a home to live in, and it really doesn't do anything for me but lower my expenses once the mortgage is paid off. But I just showed in here as motivation. But here's my only debt that I have, which is a credit card that's just as the running balance for the month, and I always pay it off in full, so I do not accrue interest. And then here's the total net worth, which is of course changing by the second with the market still open at $1,777,632.83. And this could keep going up or could go way down. It could be in the 1.6s in a week or two, who knows, knock on wood. But here's the breakdown of stocks, 86%, and then home equity about 7%, about 5% in cash. I'm probably way heavy in cash, but I'm kind of holding that in hopes of paying off my house sooner. May sell this, the 184,245, which is in excess of what the mortgage is, but I would have a tax liability there. I could do a combination of, sell part of it and do cash or whatever to get rid of this, but we'll see. I'll keep you guys posted. I also track the average monthly dividend of everything that pays interest or a dividend, and that includes, my IRAs, 401ks, and I've annualized the dividend because they're variable for all these ETFs. So at the end of 2024, starting in 2025, I will find out the cumulative dividend for like VYM, hopefully it goes up, VTI, VXUS, and put those in there to get the new average monthly dividend. And you can see right now, all sources, my average monthly dividend, if I were 59 and a half years old, I would be getting an average monthly paycheck of $3,305.42. Of course, I've got some time. I've got about 8.5 years until that happens. So this is going to keep going up as I keep investing and don't sell these shares as I keep this going. But of course, if I do sell these shares over here to pay off the house, my expenses are going to be lower. It'll lower my average monthly dividend, but it won't matter because my expenses are going to be minus a mortgage. And then tracking the net worth over time. I started tracking this over here in November 2022, and also my W-2 income net of insurance as well as 401k. And I put my monthly expenses, and then I get a gap. And then most months you can see I've done well. There's been a gap. There's some months where I had a sick pet for these 2 months, and then the purchase of a home. Here I had some one-time expenses, moving expenses, things like that in February, but all other months I've been able to be above water. We can see in October, one paycheck there. Expenses are not done, so I don't have that there. We can see, though, in September where we wound up, where I had a nice gap there, and then that's where I closed, and this is rounded to the nearest $100. So that's all I had to show you for this video. We'll see if we've timed out of here. No, we haven't. And after all of my talking, Costco, Apple, Aflac, KKR, and Hershey's were my selections this week. Let me know in the comments below what you bought this week or what you have your eye on to buy next week. I hope everyone has a fantastic weekend. Everybody take care.